Hello everyone. Yesterday, before our market opening, all the Asian market was very positive as China got the better industrial profit data. But still, taking the negative cues from US and Indian ADR, Nifty opened gap down of 30 points and on top of that, in the next 1 hour, it dropped another 100 points. But after that, from around 10:30 am, it got the phenomenal recovery. It recovered almost all the lost points and closed on a positive note. Here, you may ask why. The answer is Nomura's report on Indian equity. Just for info, Nomura is the largest investment bank in Japan and they got the assets under management of over 300 billion US dollars and also one of the major FII in India. So always, like how Jefferies and Bank of America report carries weightage in Indian stock market, similarly Nomura's report also got the similar strength. Now the next 1 or 2 minutes will be boring, but I will tell exactly what they said. Then we will see the Nifty so we can understand easily the price action. First of all, they did agreed that the recent higher oil price increases the softness in Indian market and also increases the exposure. But because of this higher oil price, it gives the window of opportunity to invest. They said India is the major beneficiary of China plus one strategy and also Indian stock market is benefiting from the India's K-shaped economy, higher earnings growth market, earnings revisions and constant domestic fund inflows despite the high interest rate. And because of all those reasons, they are upgrading the Indian stock market from neutral to overweight due to its fundamental nature. And in the same report, they highlighted that Reliance, L&T, ITC, ICICI Bank, Axis Bank all trading at reasonable valuation. Now, let's see the Nifty's positive contributors. In that, top 4 out of 5 stocks is which they highlighted. Anyway, they also highlighted that ICICI Bank's return of assets is far better than HDFC Bank's one. But still, throughout yesterday, both ICICI Bank and HDFC Bank was under severe selling pressure. So, in summary, this Nomura report and Asian market positivity supported our Indian market and closed positive. Even the overall advance second ratio was 1.2, which means 20% more number of stocks advanced. However, for the 7th straight day, FII was still a net seller. The net sold for approximately 350 crore rupees, while DII net bought for near 390 crore rupees. Then coming to US, as per their commerce department, last night they released the report on month-on-month basis that their core durable goods orders increased 0.4%, which was well above their expectation 0.1%. Taking from that positive macro, all 3 major index opened positive. However, in the middle of the day, 10-year treasury bond yield again reached the another multi-decade new high value above 4.6%, which is indeed very negative and pushed all 3 index down, especially the tech stocks. Here, in major tech stocks, only Google closed positive as they announced that AI going to do the search engine optimization for the better user experience. Other than that, mostly closed significantly negative. In the end, Dow Jones decreased 0.2%, S&P 500 closed flat and Nasdaq up by 0.22%. In case of US VIX, it decreased 3.5% and moved around 18.2 from near 19. Regarding oil, US inventory dropped by over 2 million against the expected drop of 1 million, which increased the fear for demand. Hence, it all made the price to increase over 2%. At this time of this video, WTI crude oil is trading at 93.5 US dollars per barrel and Brent crude oil traded at 94.5 US dollars per barrel. Coming to Indian ADR, both banks closed positive of 0.5% despite it closed negative in Indian market. In case of IT, it increased more than compared to Indian market. So both the sectors signaling positive trade today. Then about GIFT Nifty, during US market hours at 2:30 am Indian Standard Time, it reached the high of 19,745, but at 3 am Indian Standard Time, it dropped slightly and closed at 19,718. And at present, there is no premium to spot market, hence indicating a flat opening. So that's what happened in global market yesterday. Now let's move to the India specific. First, very important, today half yearly NSE Rejig. So if required, please pause and have a look. These are the stocks which are going to have a expected fund inflows and fund outflows. As per this, HDFC Bank is going to be a major beneficiary as it is going to get fund inflow of near 90 million US dollars. Then the second, Power Grid. TVS Motors, Punjab National Bank and Adani Enterprise are some of the stocks that are going to have net inflow. On the other hand, NTPC, Page Industries, IndusInd Bank, ACC and Adani Port are the companies that expects to have fund outflows. And one more thing, in Nifty Banking Index, again if required, please pause and have a look. HDFC Bank weightage going to increase from 27% to over 29%. In addition, Kotak Bank and SBI are the two other banks going to have increased weightage. In contrary, all other bank weightage from today onwards is going to reduce compared to yesterday. Second, as per stock open interest, Gujarat Gas, Colgate Palmolive, Vedanta and HAL got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Ramco Cements, Titan Company, Acre Motors, India Cements and Trent got an increase in open interest along with a positive price close, which means these stocks got the long build-up. As a summary, US market looks flat and even GIFT Nifty indicating the flat opening. However, Indian areas indicating a positive trading, but again increase in oil price is really negative. Let's see how our Indian market is reacting to all those. Regarding the things to look out, around 12:30 pm to 2:30 pm, lots of Europe's inflation related data and consumer confidence data is scheduled to release. And in the night, US GDP data, usual weekly jobs data and home sales data are some of the items we need to keep an eye out today. Coming to technical, as we discussed, Nifty opened the gap down and followed a sharp correction thereafter. Soon it had a good recovery which lasted throughout the day, and thus on the daily chart it forms the bullish engulfing pattern which is widely known as bullish reversal. And also it managed to close above the 40-day moving average 19,630 and 61.8% Fibonacci retracement level 19,604. Here all the three showing the sign of strength. Technically at present the daily momentum indicator has reached the equilibrium line, indicating that the correction is now matured and it can start the new cycle. Thus both price and momentum indicators suggest that today's low 19,554 shall be a short-term bottom, and I expect Nifty is likely to witness a pullback in the next few trading sessions. In terms of levels, 19,600 to 19,550 is the crucial support zone, while 19,880 to 19,900 shall act as the immediate hurdle zone. Then in case of Bank Nifty, it held on to its 78.6% Fibonacci support 44,360 and also witnessed a sharp bounce back. Thus, I believe that a short-term bottom is in place, and Bank Nifty also is likely to witness a pullback in the next few trading sessions towards 45,000 initially, and above that potentially towards 45,200. On the options front, the maximum call option open interest is at 19,800 strike followed by 20,000 strike, with meaningful new call writing at 19,700 strike, then 20,000 strike. Hence 19,800 may be hurdle on the higher side, while the maximum put option open interest was at 19,000 strike followed by 19,500, 19,700 and 19,600 strikes, with put new writing at 19,500 strike. So it's indicating 19,600 to 19,500 is expected to be the near term support. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.